Stop chasing. This is Marcel, aka Honey Bunny Sunny, and you know I'm on a mission to make you some money. Listen, today I have a really good video for you. It is Lessons from the Greats. Today's episode of Lessons from the Greats, where I go over great traders' advice from their books and teachings. We are covering Trading in the Zone once again by Mark Douglas, one of my favorite trading books of all time. Today's excerpt is coming out of chapter 7. So chapter 7, page 120. It's called Eliminating the Emotional Risk. This is very important. All right. To eliminate the emotional risk of trading, you have to neutralize your expectations about what the market will or will not do at any given moment or in any given situation. You can do this by being willing to think from the market's perspective. Remember, the market is always communicating in probabilities. At the collective level, your edge may look perfect in every respect, but at the individual level, every trader who has the potential to act as a force on price movement can negate the positive outcome of the edge. To think in probabilities, you have to create a mental framework, a mindset that is consistent with underlying principles of the probabilistic environment. A probabilistic mindset pertaining to trading consists of 5 fundamental truths. Number 1, anything can happen. Number 2, you don't need to know what is going to happen next in order to make money. Number 3, there is a random distribution between wins and losses for any given set of variables that define an edge. Number 4, an edge is nothing more than an indication of higher probability of one thing happening over another. Number 5, every moment in the market is unique. All right, let's unpack this. Number 1, anything is possible. This is something that just you must accept. All right, you must accept as a trader. Now, some people might be like, well, that sounds like gambling. It's like, well, if you want to classify anything being possible as gambling, then life is a gamble. You know what I mean? Everything has the possibility of an outcome that you didn't think about or that you couldn't necessarily conceive or fathom. That's just the world that we live in. Okay, so anything is possible, and any type of news event or whatever could happen in the world that could directly impact the market. So it's always important to just keep that somewhere in the back of your mind and accept that. Number 2, you don't need to know exactly what's going to happen next in order to make money. You just need to have an understanding of what you're looking at, right? So not knowing what's going to happen next just simply means that you don't know how it's going to happen, but you have an inkling or an idea based on your research or your analysis that something will happen in your favor. Now, the beautiful thing about this is that there's a upside to it and a downside to it, right? You don't know how it's going to happen, meaning like it may happen slow or it may happen fast, right? So the downside is like it may happen slow, which could lead to you possibly getting out of the trade before it reaches its full potential. And it could also happen fast, and you could make way more money on the wake up if you're swinging a play than you would have imagined, right? You might have been only accounting for it to go to a certain level, and then you wake up and it's up, 3 or 4% on equities, which makes your options contracts way higher than you anticipated. So, the downside is like sometimes it will work out, right? But not the way you wanted it to work out, but it still works out. And then sometimes it works out in a way that you couldn't have drawn up, but you wind up making even more than what you expected. So all you got to just know is the direction, right? You don't have to know exactly how it's going to happen. You just need to know the direction that the stock is going. Number 3, there is a random distribution between wins and losses of any set of variables that give you an edge. Okay, so what this means is that the thing that you are counting on as your edge, right, that high probability thing, there is, random wins and losses within that, right? So even though something may be high probability, there's still a randomness to whether or not it's going to work out or not the time that you choose it. That's what makes it a probability. There's nothing in this market that's guaranteed. The quicker you can get that out your mind, the better off you'll be. It's important to get that completely out of your mind because it helps you take things less personal. The less personal you take trading, the more successful you are. The less personal you take life, the more successful you are. These two parallels run together. You're going to always hear me talking about life and trading because they literally reflect one another. All right. So if something has a 80% probability, there's still 20% chance that it doesn't work out. And that's not your fault. That doesn't make you a bad trader. It's just the probability of the time that it wasn't supposed to work out. Number 4, an edge is nothing more than, a higher probability of something working out one way than it is another, right? So when we're talking about an edge, we're just talking about having a high probability, right? Neutral, 50% chances wouldn't be an edge. 60 is a slight edge. But when you get into the 70, 80% probability of something working out, that is a pretty solid edge for you to then enter. Me personally, I don't like to enter things unless I have a solid edge, right? I don't like a slight edge. I like a solid edge, meaning that it's more likely that this thing is going to happen, like way more likely that this is going to happen than this thing is to happen. That's how you keep your capital strong. That's how you increase the chances of you winning and making money, is by only searching for things that have probabilities of 70, 80% and higher. And last but not least, number 5, every moment in the market is unique. Now, this sounds a bit hypocritical or a bit like a contradiction, because we depend or rely so much on historical information to make decisions about what we're going to do in the future. But even with that historical information, there's always a slight nuance. Just take a moment to observe your charts, right? There's always a slight nuance to everything that is somewhat repeatable. It might have approached a resistance level with a lot different volume, or it might have rejected off that resistance level with a different sort of reversal signal. So things always look a little bit different than what they did in the past, right? Every single day, every single bar on the chart looks a little bit different than the day before. The beautiful thing about all these things I just named is that it takes a lot of the pressure off of you, right? You start to understand that the market has a mind of its own. It moves in a unique way. Nothing is 100% precise to the T. And it allows you to just take a little bit of pressure off yourself and understanding that it's not you, right? It's you understanding like the probabilities, right? So if something doesn't work out, it doesn't mean that it's your fault. Still journal it, still take note of it so that you can, track your personal patterns and see how you are the problem sometimes, right? Because sometimes it could just be you making mistakes or having bad habits. But if you're doing everything according to your rules and you're following, the idea of only going for high probability trades, you have to accept that sometimes you're just going to lose. It's like that in life. You can still win a championship and lose, regular season games. Always keep that in mind. You can still win, but you don't have to win all the time. All right. We just want to make sure that we are taking high probability setups majority of the, or not majority of the time, all the time, so that we increase the likelihood that we do win, and that when we do win, we win big. All right. That's Trading with the Greats. Again, this lesson was from Trading in the Zone by Mark Douglas. If you have not read it, make sure that you put this on your reading list. It's going to take your trading to the next level. Also, if you do not have a trading home, the Prosperity Collective is the way. We would love to have you join. All right, we got people in there changing their lives every day. You've seen my lives, you've seen my videos, you see how I'm calling plays left and right. Imagine that times 10 in the Prosperity Collective. All right, I know there's a lot of groups out there that you can choose from. A lot of people chase popularity. We don't do any of that over here, right? It's not about the look of it, it's about the results, right? How many people's lives are you actually changing? How many people are actually really starting to understand what's going on, right? That's all we care about, all right? And we do it with good energy and laughs and all that stuff in the morning. So if you want that, if you've been trading by yourself and you need a community, it's no better one, all right? Click the link in the description. It's in all the descriptions of all my videos, and I'll see you on the other side. Remember, invest smart, live free. I'll see you in the next one.